This is Jay here from ZTA, and I hope you're doing well. I hope you guys are having a wonderful week so far. I wanted to show you a cool little project that we have been working on for the last couple of weeks. This is the ZTA strategy correlation spreadsheet, and the whole entire goal here is to help us model or assess how our algos are going to work when placed in the same portfolio together, right? Because like I always say, the goal isn't really to get one algo, right? One algo isn't really going to change your life in any significant way, right? It's not going to help you retire tomorrow and retire like your parents and change your life. You really kind of have to zoom out and start to think at the portfolio level. Like you have to learn how to see yourself as your own mini hedge fund in a sense where you as one person are employing, two, three, four, five, six plus systems in the same portfolio and the same account. And in order to do that efficiently and effectively, and in order to use capital efficiently, you have to first assess something known as a correlation. And all a correlation matrix, as you see here in this table, it's a fancy word to mean figuring out relationship is between two sets of data, right? So imagine you have the monthly returns of strategy A in a column, and then you also have the monthly returns for strategy B in another column. And you wanted to assess just how closely those returns are related. Using tools like Excel or Sheets, we can actually run correlation analysis on these two different sets of data and get a value, right? And that value is known as a correlation coefficient. And the closer it is to one, the more correlated two sets of returns or two sets of data um, are. And the closer it is to negative one, the more lowly correlated or the more uncorrelated two sets of data is thought to be, right? So you can see right here that in these tabs here at the bottom, these are the monthly returns of all of our publicly available strategies so far from the last full calendar year, so 2022. And we took the uh, last year's monthly results of the walk forward optimization of all our strategies, and we plug them into this chart to get a correlation table or a correlation matrix, right? And so you can see that if for some reason we wanted to know or figure out just how correlated trader fade, for example, was to trend hunter, all I would have to do is come down here to trader fade and move across to the trend hunter column. You can see that the overall correlation of those two strategies is 0.30, which is quite low, which is good. And as a rule of thumb for me personally and for our team, we find that correlation coefficients of zero point 0.5 or less, or excuse me, of less than zero point 0.5 are ideal for our accounts and our portfolios, right? So we're ideally looking for overall portfolio values to be lower than zero point 0.5 overall correlation. Okay, so 0.30 is perfect. If you wanted to see how related trader fade and KC snipers returns are, you can see that it's a 0.765. So this is a higher correlation, right? So that means that if you have KC sniper and trader fade in the same account, and you have them running and trading at the same time, they could make money as a team, but they could also go into drawdown at the same time as well. And so it's generally not recommended to trade, two, three, four plus highly correlated algos in the same portfolio, right? Because when one is in drawdown, all of your algos are now in drawdown. And trust me, drawdowns can be absolutely brutal, right? I'm talking weeks long, months long, quarter long losing streaks where all of your algos are losing money. And it is not easy to stomach, it's not easy to sit through, and it's certainly not easy to sleep through as well, right? So it's important to give some thought and attention to correlation, and it's important for you to figure out how to construct the smartest and most efficient portfolio, right? So you got to think through which systems work best with each other, right? So this tool here, we are currently sharing with our paid subscribers. And so if you're in our community, if you joined our room, we will gladly share this tool and allow you to figure out and think through which systems are most fitting for your future goals and for your needs, right? So as always, man, I hope you guys continue to have a great week. And this is Jay here from Zion Trading Algos, all right? Stay blessed.